Hey everybody, it's me, the Einstein of Wall Street, here from the balcony at the New York Stock Exchange. I'm so sorry I can't be at Toronto 2025, the Money Show, but I thought I'd give you a little bit of a background on what's going on in the market. I want to read you something which is on the brochure for this event, which I think is really significant. It's going to sort of set the stage for what I'm about to talk about. It says, discover the latest investing and trading tactics and strategies for an evolving market environment. Canadian investors have weathered a storm of challenges: tariffs, political uncertainty, recession fears, and market volatility. Yet the TSX is rising and Bay Street is finally outshining Wall Street. What's driving this momentum, and can it last? You know what? That couldn't be better to set the stage for what I'm about to share with you. First of all, I'm here at the iconic New York Stock Exchange, greatest financial institution in the world, corner of Walk and Don't Walk, corner of Broad and Wall Street. I've been here for 40 years now, just celebrated 40 years here at the Stock Exchange. And, you know, one of my specialties is I'm not a financial advisor at all. I am sort of a forensic broker. I like to break down market conditions and give sort of my tack on why the market's doing what it's doing, and to kind of give everybody a sort of overview. And then from a trading perspective, I think I really want to share some of what's happening new, because of course, ever since COVID, right, when what we call the democratization of the trading and investing community happened, right? Everybody was suddenly with an iPhone and $100 could trade the market. Everybody's been invited to the party. Right? And the bottom line is, this is not a get-rich-quick scheme. FOMO, hype, hope are not potential trading strategies, and there's a lot more to it. It's not about that. It's about learning, educating yourself, motivating, and getting inspiration to invest and trade in the stock market. Hopefully, many of you are brand new to the market. Some of you may be already just retail traders who may be struggling with this new environment, because, trust me, 2025, and I've said this time and time again, what's happened to the market in 2020, everything possible in a market, the high highs, the low lows, the catastrophes, the tariffs, the interest rates, the Fed, the battle between J. Pow and the President of the United States, all of that stuff, really record highs over and over. 2024, we had 58 record highs out of 218 trading days. We've already had 25 record highs across the board, and we're in the middle of one right now. Yesterday, the NASDAQ and the S&P and the Dow closed at record highs. So we couldn't be in a better spot to try and explain to you where we are. Now, the market being at record highs is all fine and good, but it's a matter of, how do I impart onto you, the investing and trading community, what does one do at this point in a market, right? So I'm going to give you a little bit of a breakdown here. So I started to say that everything that could happen to a market in 2025 has happened, right? And if I were to be sitting here and the market would be down 15%, you know, and having gone through the trials and tribulations of that self-inflicted economic Armageddon, you know, that happened February, March, and April of this year, down 20.8% in a period of 11 weeks, it would make almost more sense for me to try and help you navigate this if we were talking to you from a down 15% perspective, like what was going on back in February, March, and April, which I call a mini crash. And I don't use the word crash lightly. I've lived through, I was not here for the crash of 29, although some people say I was, but I've been here for every crash since then, and I don't use the word lightly. And I do say that what happened in February, March, and April was in fact a mini crash. Selling off 20.8% in 11 weeks is significant. Now, the only silver lining from there, which I talked about at the time, was if we can go down 20.8% in a period of 11 weeks, we can go back just as quickly. And in fact, what did happen, and it caught a lot of people off guard, and it is one of the significant components to why the market is still trading at record highs, is that everybody got caught off guard, because we rebounded, got back to even, and then some within 4 to 5 weeks after that incredible sell-off and the lows of April 19th. Let's go back for a minute. That was unbelievable, right? And I know, look, for the most part, we have $6 trillion on the sidelines still. A lot of the investing community got caught off guard by that rally, right? And you know what? Let me go back here for a minute and talk about this, because the question is, why are we still, with all that's gone on globally, economically, politically, are we still trading at record highs? And I want to go back to where we are. 2024, look, since COVID, what an amazing 5 years this has been, right? We know that, we've learned a lot, and the Federal Reserve has learned a lot from past crashes, right? We know that the crash of 08, 09, right? The Federal Reserve put $800 billion stimulus package into the market over 18 months, and it took us 8 years to get back to even. And I know, as I told you, I've lived through every crash since the crash of 87, and the only component of every crash that's similar is that before they happened, we were at record highs. That's all that's the same. All the other things, all the components that made them happen were different. Everybody should go out and do their own homework. It's fascinating to analyze what caused all of these crashes. And they were, look, it was fascinating, right? One was what do you call it? Sort of a predatory lending disaster. One was obviously a health crisis. One was a computer insurance crisis. Lots of different things made up each different crash. But what differentiated COVID from it was that the Federal Reserve, seeing the devastation, seeing the globality, if that's a word, of that crisis and the massive sell-off that we saw on March 23rd, 2020, was that they knew, and I'm a firm believer in this, whether this is not political, whether you like Jay Powell or not, I love the guy. I think he's navigated us here in the States through some of the hardest times ever and has taken us to where we are today, right? Without him, I believe after COVID, we would have been all on bread lines. That's my opinion. But all that being said, we put $3 trillion into the market over 3 months, and we were back to even by April. Imagine that, 08. $800 billion into the market over 18 months, took 8 years to get back to even. COVID, $3 trillion over there into the market over 3 months. We were back to even by August 19th, and then we were up 20% in 2020, up 22% in 2021, 22, obviously due to interest rates, inflation, and whatnot. Market pulled back, double digits, significant, okay, that's what happened. 23, 24, respectively, up 23%. So we came into 2025 with a market that any of you, if you're traders or hedge fund people or working in brokerage firms, know that they were good years, right? That we had the massive rally in the tech. We had NVIDIA February 23 going from $103 to February 2024 to $700, and then going on to $950 in June, and then going to $1,100 and splitting 10 for 1 with a $50 billion buyback, right? Mag 7 taking off, right? The AI phenomenon, the AI revolution, right, has been part of what's been going on too. Coming into 2025, obviously, look, and historically, politics doesn't play a big part in the way the market works. However, Mr. Trump is a different egg, right? And we know that. And everyone in anticipation of the fact that he's a bit of a wild card, whether you like him or not, knowing that tariffs, which was something that was significant on his first administration, going back to, I have a bit of a photographic memory, going back to Trump 1.0, okay, and Davos, the first time Mr. Trump mentioned China and tariffs, the market sold off. It was 11 o'clock on a Tuesday. And the market sold off 1,400 points within 7 minutes of Mr. Trump mentioning tariffs and China. By the day's end, we were up 1,400 points. We had an intraday reversal of 2,800 points. By definition, we went from a bear market to a bull market in 1 day. I say that to say that all of the terminology that we use, bears and bulls and death crosses and whatever, are sort of insignificant in the new world that we live in. Because if you can go from a bear market to a bull market in 1 day over lunch, right? If you can have this kind of volatility, intraday moves of thousands of points, markets down 2,000, closing up on the day, the crash of August 06 with the Japanese stock market and the carry trade, all of those things, right? If you can do that, then that old terminology that we use, right, that the mainstream media uses to catastrophize the markets, the worst stuff, the best stuff, never since then, all of those numbers and all of those adages are not that meaningful, right? Because they change their meaning when markets do what we do here, right? We've seen in 2025, the market has done absolutely everything a market can do. Up 1,000, down 1,000, intraday reversals, intra lunchtime reversals, interest rates, tariffs, 185%, 145%, fighting with China, fighting with Jay Powell, that cross-line stuff going on between the president and the Federal Reserve, which is not supposed to happen by law. So let's take back and go to January 2025. Put yourself in the seat of an investor. a trader, right? Let's go investor for a minute. And if you think about it, and you just had gone through a market of 23 and 24, and you were up, give or take, if you follow the S&P or you were part of that spectacular movement, you were up double digits over 23 and 24. Now, whether you were a Trump backer or not, you have to know that tariffs are going to be a big part of his policy, that he was a wild card, that we don't know what he's going to bring, right? And that the dissemination of information, which he has a very special way of doing, right? Think about the old days. In the old days, a Fed chairman, a president, a congressman, anybody who has speech that impacts markets were really not allowed to disseminate info except before the market opened, after the market closed, or at a designated news conference. You could not send out a tweet at 3 o'clock in the morning, after a bucket of Kentucky Fried Chicken that woke you up with a little bit of indigestion, and send something out that would be massively, markedly, globally impactful. It just didn't happen. So, taking that all into account, and I say that because it's going to explain why that mini crash that happened February, March, and April happened. It was a matter of the dissemination of information. Because look, let's be clear, markets can handle anything. They've handled war, they've handled pandemics, they've handled, predatory lending crashes. They've handled everything. And they've been able to be resilient and sustain their integrity. So markets can handle anything. What they can't handle is uncertainty and surprises, and that's what happened this year. Let's go back for a minute because I got a little ahead of myself. So think about it. You're coming into 2025. You're like, I don't know, 70-30 equities versus cash. Why not? You're up 20%, 20%, 23% respectively, 23 and 24. You like the market. Equities are hot. However you diversify your portfolio, equities are hot. You're doing really well in the market. Now, you're coming into a new administration, a new policy, right? A wild card of an administration, and you don't want to give back those. Look, nobody got broke taking a profit. So I think what we saw was that a lot of people, and this falls under the explanation of why there's so much money on the sidelines and why the markets have been able to maintain and sustain record highs throughout all the madness that's gone on. Think about it. We got a couple of global wars, right? We have so much going on with tariffs and interest rates. We've got a lot of intra-global fighting. I mean, so much is going on, yet we continue to trade at record highs across the board, no matter what. Even with the breakdown of the economic stuff that's happening lately. Let's go back. I'm getting ahead of myself. I'm so excited to be here with you guys. Hello, Toronto 2025, The Money Show. I love being here. Debbie, thank you for inviting me. So, imagine it's the beginning of the year, 2025, right? And you decide, you know what I'm going to do? I'm going to try and hold on to my profits. I can always get back into the market once I see how the world's dealing with the new administration. So I flip out going 70-30 equities. This is just an example. These are not real numbers by any means. But I'm just saying equity heavy and then, diversify your portfolio. Why wouldn't I flip out of that? And I'm actually using an example of my dentist, whose name is Don Berger. And he was a guy who was like 80-20 equities. He rode this market, super smart trader. So that is Klarna happening right downstairs here. Swedish company, obviously it's a pay company that's about to go public. And if we're going to be doing this live, let me see what it looks like. Where is it going to open? What's it look like, guys? 52. So Klarna about to open here. Another thing I'd love to talk to you about if I have enough time, but that's the IPO market. IPO market is hot. We've had Bullish. We've had Figma. Two of the hottest IPOs that we've had over the while. The landscape on IPOs is hot. I wish I was there to talk to you more about that. I've traded more IPOs than probably anybody on earth right now. Klarna priced at 40, opening in the 50s, right? There's a lot of enthusiasm around the new IPO market, right? That is something that's a story unto itself. If anybody's interested, I've done YouTube stories about IPOs and how the market was hot in the 90s and then WeWork destroyed the landscape and we're now building back that confidence around IPOs, right? And now we've got IPOs that have been hot. Figma and Bullish have both open at high premiums and traded higher. Klarna's now opening at least $10 over the price, and there's a lot of enthusiasm on it. Sorry, I got sidetracked. So you come into this year, 2025, and you flip out of heavy equities, and you want to see how the market is going to sustain with the new administration and this new thing called tariffs, right? Which has not historically been good for the markets. It's a tax, it's a charge. And Mr. Trump tends to be a pretty combative, and he throws out a big blanket like he did. This was no different than any other time. 185%, Canada, and look, the first thing he did on February 19th, the first mention of tariffs was February 19th when he said, I'm imposing a 25% tariff on China and Canada and Mexico. That was the beginning of the sell-off of the market. The market sold off aggressively that day and proceeded to sell off more than 20% over the next 10 weeks. I know you all felt it. Okay, and that was the beginning of what's gone on to become a huge fight between our countries. Anyway, you come into this year, you flip out of heavy equities and go into light equities, okay? And you want to see how the market's going to respond to the new administration. You see that for a while there, you looked really good, right? When the market sold off, you go, okay, I've done the right thing. I pulled out of the market. I'm a heavy cash, light equities. Now I can choose my spots. This is from an investor point of view, not a trader point of view. And I got to fast track because I don't have that much time. But anyway, and then suddenly, when we were in the bowels of that time, bound down in March and April, right? April from like, I don't know, like around April 7th, when we hit those lows down on April 19th, I was looking at this market, not really knowing whether we were going to look back at this time as a time to have sold because the market's going much lower, or was this once again going to be a buying opportunity like we saw in 2024? Every pullback and every sell-off that we had in 2024 was nothing more than a buying opportunity. That's what everybody should note. Short of crashes, even crashes, the sell-offs that this market has had over the last 100 years have been better buying opportunities. When everyone else is selling, one should probably be a buyer. When everyone else is buying, probably one should be a seller. Goes back to the old Caddyshack movie with Rodney Dangerfield. Anyway, a quick side note. No one would have expected that the market would have turned around the way it did in April, and that the market would rebound and get back to even after Independence Day, Liberation Day. I don't remember what it's called. We were able to get back in 4 weeks all that we had lost and gone on to trade now at record highs. We blew through 45,000 on the Dow. We blew through 6,500 on the S&P. And we blew through 22,000, 23,000 on the NASDAQ. That's extraordinary. Russell trading at record highs. Crypto trading at record highs. Gold trading at record highs. Everything that is not battened down is being bought. Okay, and you must ask yourself the question, why? First of all, why are we still trading at record highs? For lots of different reasons. Earnings are the lifeblood of this market. Last quarter, earnings were solid, even though they were clouded by the inability of the companies to give guidance, right? Earnings are what happened last week, guidance are what happens next week. They weren't able to because of the uncertainty around tariffs, right? Even Jamie Dimon, even United Airlines, all of those companies were able to give solid earnings, but no guidance. And that's what started to erode the confidence of the market. Even quoting Ken Griffith of Citadel, that Brand America, after Mr. Trump on February 19th, started to talk about tariffs and proceeded to talk about them every single day, and single-handedly eroding the confidence of Brand America, talking about tariffs the way he would send out that giant swath, 185% tariffs. I mean, that was insane. Almost completely shutting down the supply chain. We were talking that boats were lined up in China, 100 deep, container ships that could not take delivery of products because we didn't know what the tariffs were going to be. The LA port at a standstill. Truck stops in the Midwest at a standstill, empty, because no one knew what the tariffs were going to be. I'm not going to start delivering products if they are a $20 product and the tariffs suddenly went from $2 to $10 and there's no money to be made. That's what shut everybody down. We're out of that mode now. We have sort of gotten a handle on it. 10%, 15%, we can handle that. That's reasonable. As I said, markets can handle anything as long as they don't have a lot of uncertainty and surprises. We've had time to digest what's been going on with the tariffs. And look, we've got deals with UK, EU, we've got deals with Japan, we've got hopefully some deals with you in Canada. And hopefully they'll be good deals, that we will be able to rebuild our relationship from a trade perspective, okay? So let's just go quickly into where we are right now. Right now, the market, irrespective of all that, there's $6 trillion still on the sidelines. That is one of the contributing factors to the market trading at record highs. Money on the sidelines, people trading catch-up. What happened was, I want to talk for a moment about the retail investor, because the retail investor that came in during COVID got their derriere is beat up pretty good by the GameStop phenomenon and the memes and all that, right? So many of them just walked away from the market. I know they all claimed on Instagram that they made millions of dollars. Chances are they didn't, and they probably went home with a little bit of schmutz on their nose. Many of them came back. A lot of the retail trading community has matured a lot. And I'm sure many of you are that part of that community. You are the guys buying the dip in February, March, April, not the institutions. The mutual funds and the institutions were selling. And they are now having to play catch up. They're the ones now who are sitting on the sidelines at the end of Q3 going, oh my God, I did not buy enough stock. This market is trading at record highs. What do I do now? So that's a little explanation of why the markets are trading at record highs. They're trading at record highs because S&P, 80% of the S&P beat. Oracle came out yesterday. It's up $100, 25%. The AI phenomenon is a revolution. Trillions of dollars, capex going into that industry. This is just the beginning. We are, courtesy of Dan Ives, who's been on the Money Show many times. He's my partner in Einstein and Ives. Go check that out. It's a YouTube channel. We are in the second inning of an extra inning game in the AI space. Okay, trillions of dollars still. And look, think about what's happening. Apple, Microsoft, all these other companies are committing billions of dollars to the AI phenomenon. We're in the midst of a revolution. That is going to sustain this market for a long time to come. Okay, the secondary and tertiary stocks within the AI space are starting to get some big lift. Even quantitative computing sector is starting to get hot. So all that being said, that's from an investment point of view. That's why we are where we are. I'm confident. Look, there's many people who think that the market is way toppy, over frothy, and ready to sell off aggressively. Then there are people who think that we are just at the beginning of a massive rally and we're going to close up double digits for the year. That's what makes a market, right? There's, for everybody who's buying it, there's somebody who's selling it. We're seeing a lot of rotation right now. That's for the days where the market is up and you're seeing the 50-50 advances versus declines straight across the board. People are rotating out of overperformers, underperformers into things that have some value. That's why the Russell has been as strong as it's been. From an investment point of view, we're in a good place. Okay? AI and tech is hot, right? Are they seem like they're overpriced to a certain extent? Maybe. But as my man Dan Ives said, and I surround myself with people way smarter than me, that as I said, we're at about 8 p.m. in a party that's going to go through 4 p.m., 4 a.m. Everybody's having a lot of fun, and this party is going to be robust and exciting. Second inning of an over innings game. We haven't even seen the beginning of the capex expenditure and growth across Mag 7 and all the other names that are investing in the AI space. It is a revolution never before seen. Let's go quickly to the trading space because I got to mention that. So what's happening right now, which is surely significant, is the influx of 40, 50 million new traders into the marketplace. I've embraced them. I have a partner named David Green. We started on Wall Street together. We created an academy during COVID called Wall Street Global Trading Academy. Right? We have tens of thousands of students all over the world. We teach technical analysis, risk management, money management. I go on Trade Zero, Canadian company, talk about markets all the time. Okay, there are so many young people trying to get involved in this market. Everybody's focused on this market. I just recently did a video with a guy named iShowSpeed. He's a young influencer that has 100 million followers. Everybody who's started to follow me since then wants to know how to invest and how to trade the market. The market's on fire. It is the hottest thing out there. Everybody, the unbanked, the underbanked, right? People who have been trading retail and just don't know even what to do. There's so much education needed to be done to learn to day trade this market. If you need help, come and check me out. I'll be happy to coach and mentor you. David Green, my teacher, my mentor, my friend, one of the greatest in the technical analysis space. Come and check us out on Instagram. I'm happy to share with you everything I know about these markets. Now, the last thing I'll say is we partner up with a company called Apex Trader Funding. One of the impediments to young people trading this market is you need $25,000 to day trade the stock market. Okay? A lot of the young people don't have that kind of money. Apex Trader Funding comes along. They are a simulated trading platform, trading the futures, who will give you accessibility and fund you to trade the market. I'm not here to plug them in any bigger way that all the barriers to entry are down. Anybody with $22, $25, $28 can get access to the markets trading the futures. If you want to, I'm happy to introduce you to it. We will educate you. They will give you accessibility and funding, and that is a match made in heaven. It's a recent partnership, and we're hoping to just explode it globally because everyone should have a chance to trade this market. It is no longer the days of the exclusive market where you had to be a qualified trader to trade this market. Anybody should be able to get involved in the stock market, trade it, make some extra disposable money, find the excitement and adrenaline that's made it my life. Every day for me is like being in the Super Bowl. Go check out Wall Street Global Trading Academy, WSGTA.com. Go check out my Instagram page, Einstein of Wall Street. I put out a lot of really fun content about markets. That's Klarna going public. First trade, let's see what it is. Wow. It opened at 52. Okay. It opened at 52. It's trading at 51. Let's see what happened. Anyway, you're here for the live opening of Klarna, first trade of the day. Anyway, I'm saying all this to say I hope I gave you a nice overview of where we are in the market right now, the market conditions, and where, from an investment point of view, what the future looks like. I hope I've given you a little insight to, if you're a trader, if you're sitting on the sidelines and listening to all your friends, right, talk about the market and you don't know how to get involved, please reach out to me. It is my absolute pleasure, right? Go check out all the content that I put out. I am an educator. I'm a motivator. Thank you. I'm an instigator. I'm a disruptor. I'm here to give you access, educate you, so that you, if you want to be a trader and learn to trade this stock market, all you have to do is reach out. It would be my absolute pleasure. Me and David Green. David Green is amazing. He's like that professor in college who you didn't care what he taught. You just love to listen to him teach. And we have this academy where we teach technical analysis, psychology of the stock market, risk management, money management. We partnered up with Apex that gives you accessibility and funding to actually trade the futures in the market. How exciting is that? So if you're sitting on the sidelines, if you're a new retail trader and you don't know what to do and you don't have the funds to trade, but you're dying to get involved because trading is the most exciting thing in the world, come and check us out. DM me. I'm happy to connect you to what I'm connected to. And from otherwise, look, the Money Show puts together a lot of people in this industry. We're here to talk about where the markets are, where they've been, and where they're going. I hope I gave you a little bit of a breakdown on that. And then for those who are new, who really want access to this, it's not the old days. This is not your grandfather's Wall Street. This is a brand new world we're living in. The volatility, the excitement, the adrenaline, right? The accessibility to this market is never before been at this level, right? The market has never been trading at such sustainable highs ever before. So it's important to know why, from an investment point of view, where the market is and where it's going. It's also from a trading perspective to understand that volatility is the lifeblood of a trader. And this market is exciting, and it's got everybody's attention. It is the flavor of the friggin' moment. So I hope I've shared with you a little bit of what I do, what I know, and how I approach my job here at the stock exchange. I run a firm called Trade Moz with the CEO of the company, Frank Mazziello. My son is my partner. We are the last father and son team on Wall Street. Used to be a family business. It is not now. I'm here at the New York Stock Exchange, the greatest financial institution in the world. There are not 7,000 people here anymore, but we are still the preemptive human marketplace. This is where it all happens. Everyone should know the best liquidity, the best protection, the best structure is at the NYSE. We are where it happens, okay? And you know what? Come and join me on this incredible journey called trading, called investing, called learning what happens in the marketplace, the Money Show. Love to all of you out there. I hope I've shared a little bit and you had a little bit of fun, you had entertainment, and that's all I got to say about that.